All right, guys. Today we're going to talk about Etsy. It is looking very interesting at these current levels, and it could have some tremendous upside. I'm going to break down the fundamentals and give you my thoughts of what the Etsy stock price is worth based off of the valuation metrics. And then I'm also going to go over the chart and give you an idea of where I see the price headed from here based off of the technicals. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin. I am your host. In today's video, guys, we are going to talk about the Etsy stock. It is way down from the all-time high, and I think it is at some very interesting levels that could present a huge amount of upside over the next couple of months. In today's video, I want to break down the fundamentals and give you my thoughts based off of the valuation metrics, if Etsy is a good value stock or if it's just something we should be looking to do as a swing trade. I'm also going to go over the discounted free cash flow sheet and give you my Etsy kind of stock price prediction of where I think the Etsy stock price could be headed based off of the free cash flow. And then I'm also going to break down the chart and give you an idea of where the price could be headed from here based off of the technicals. Real quick, guys, before we get started, subscribe to the channel if you're new around here and want to see more videos like this. Come over and join us at the Patreon if you want to get all of our trade setups. And Day One Squad, I love you so much. Thank you for your support. Real quick, guys, first thing we're going to take a look at is the income statement. So we're going to start with the fundamentals here because Etsy is way down off of the all-time high, and the fundamentals are actually pretty dang strong. As you can see here, guys, when it comes to revenue growth, so I look at a couple of key metrics. I look at revenue growth, I look at net income, free cash flow, and then I do like a price to free cash flow, and then I do a discounted free cash flow sheet to come up with an intrinsic value. If it was a checklist, revenue growth, check, big check. I mean, you can see here, guys, going from, 365 in 2016 all the way to 2.3 billion in their trailing 12 months. Massive amounts of revenue growth there. I mean, if we jump over to year over year growth, I mean, you can see 33, 20, 36, 35, 110, 34, 9. So obviously they had a huge boost during COVID, guys. I think that's what got everybody in because everybody needed ways to make money from home. However, I think that Etsy will continue to do very well moving forward. Because I think now that people realize that they can make money from home with an online business, selling products online, they will continue to do that. And more people will want to do that because they see the proof of concept in their friends and family doing it. I also think that the homemade, handcrafted items are going to be the thing that's going to be really popular moving forward. Anybody can go buy stuff off Amazon that's made in other countries or made even in this country for really inexpensive. And that's kind of a trend on Amazon, right? They find a product that works. Everybody goes out. They find a manufacturer overseas. They all manufacture the same product. They buy them for pennies on the dollar and they sell them. Not everybody can make a handcrafted Damascus steel chef knife, stuff like that. But that's the stuff you can find on Etsy. So I really like Etsy in that sense of the handcrafted homemade items. I think that's going to be the big thing, in the coming years. If we jump down to gross profit, same thing, guys, consistently growing that gross profit, exactly what we want to see. Net income, they are actually making a pretty good amount of money and their net income margin is around 15%. So that's fantastic. They're not only growing revenue, they're also growing their net income. So they're adding, real dollars to the bottom end, not just growing revenue. That's exactly what we want to see. They went from 81.8 million in 2017. That's when they started actually becoming profitable. And they've scaled that all the way to 493.5 in 2021 and over 435.9 in their trailing 12 months. Again, guys, awesome to see there. If we jump over to the balance sheet, we'll take a look at the just kind of overall health of the company. If you take a look at the total current assets is what we want to look at first. So total current assets, 1.95 billion versus total current liabilities at 483.2 million, excuse me. So they've got more than enough cash on hand to pay off all of their debts and be just fine. I actually think their free cash flow in their trailing 12 months is more than their total current liabilities. So that's even better. If we jump down to outstanding shares, all right, guys, so you can see they have been increasing and issuing more shares over the last 5 years. 121.5 down to 119.6, 117.9. So they were actually buying back shares all the way up until 2019. And then in 2020 and 2021, they issued shares, which makes sense because their stock price went insane after COVID and the price was at way, way higher prices than it's ever been. As a CEO, I would have done the exact same thing. Now, with that being said, they need to continue to bring those shares back down. So if they can start buying shares back, now that the stock price has fallen so much, that's what we want to see. We do not want to see them continuously issuing shares, and I don't think that they will now that their stock price is drawn down much further. So next thing, guys, and their balance sheet's super healthy. Their cash flows, really, really strong. If we jump over to the cash flow statement, guys, so cash flow or free cash flow is cash from operations minus capital expenditures. As you can see here, guys, over the last 5 to 6 years, they have done a phenomenal job at growing their free cash flow. Over the last 5 years, they have grown their cash flow on average 115% year over year on average for 5 years. Very, very impressive. When we talk about their free cash flow margin, 23%. That's more than what most companies make on their net income. Very impressive. So you can see here, guys, they went from 66 million in 2017 all the way up to 650 million in 2021, and just under about 640 million in 2021, and we're sitting 540 something in their trailing 12 months. Killing it on their free cash flow, guys. If we can continue to see that go up, I think they will do very well. As of right now, they are currently sitting at about a 16 on their price to free cash flow in their trailing 12 months. If you use a 20 times multiple, it would actually put their desired market cap up around $12 billion. So their market cap right now is around $10 billion. So the company is actually looking undervalued from a free cash flow percentage, than it is from a price to earnings metric. The price to earnings, I want to say in their trailing 12 months is more like 20, 22, something like that. So, much, much stronger on their price to free cash flow, which I would rather look at the price to free cash flow rather than the net income, especially when you've got the free cash flow consistently growing over 100% year over year for the last 5 years. It's not like it was up, down because of COVID. You can see real nice growth, even up to, when COVID hit. So if we jump over, guys, to the discounted free cash flow sheet, you can kind of see here, guys, I used a 10% revenue growth from now for the next 5 years. If you take a look at their earnings estimates, what analysts are estimating or the consensus is of what their revenue is going to grow, you can see 9.8% in 2022, but then it goes to 18.69% in 2023, 18 in 2024, 18, and then 8 in 2026. So that's an average higher than 10% for the next 5 years, but analysts can always be wrong, so I would rather be more conservative. Like I said, guys, their free cash flow margin is currently 23%. I've got it sitting at 20 right now, and I'm coming up with an intrinsic value per share at about $90. Now, I am using their cash flow for the trailing 12 months, not 2021, which was a little bit higher because the year's not over yet. So if we used full year 2021, the price would be a little bit higher, but again, rather be conservative. $90 is where I'm coming up with right now. The stock price is about 87, I believe. Now, or actually, I think it's actually 80 because it took such a beat down last week on Friday. So 12% upside from current levels. Now, if we increase the growth rate to 15%, that jumps it to $110. If we put the price or the cash flow margin at 23%, which they're currently doing, $127. So you can kind of play around with that, guys. I would like to be a little bit more conservative, maybe drop the cash flow margin down to 18%, give them that little wiggle room, and then bring the cash or the revenue growth down to about 10%, which would bring your price down to about $80. So the stock is looking like it is a fair value as of today based off of those metrics. Guys, if we jump over and take a look at the chart is looking really interesting, guys. That's what I was saying in the beginning of the video. You can see here, guys, from the all-time high back in November of 2021, we've sold off a pretty substantial amount. I mean, if you go from the peak down to the lowest low of the correction, which was, back on May 24th, May 25th, you're down 77% in 179 days. So it's taken a beating. And you can see here, guys, where did we come right back to? The initial all-time high from March of 2019, which was a major, major inflection zone. We just hugged that top from March 2019 all the way till August and July of 2019. Then we sold off a little bit, got back under that 200-day moving average, back tested as resistance, dumped again, and then we rallied right before the COVID crash and then dumped. We got right back to that inflection zone before dumping after at the COVID crash, coming right back to that gap on July 2018, springing, back testing the spring when it turned around, ran up, found a little bit of resistance at the inflection zone, but then quickly got over it, back tested it, and you were off to the races to the next zone at 113. After that, 153 and all off to the all-time high. So same type of stuff, guys. You can see here, we rallied. We had that initial high from February 2021. We dumped, we rallied, and then when we dumped again after the all-time high, we back tested that level as resistance. That was resistance back here in February. We dumped again, and we back tested this level that was once resistance in October 2020 as resistance again. Then we dumped again. And now we're sitting here flirting with that inflection zone, which is definitely the most important level on this entire chart, guys. And you can see we found it. We caught a little bit of a reaction off of it. We got out of the bearish control zone on our relative strength index. I love how we are rejecting, really getting deep inside that bearish control zone. And we've got some class A bullish divergence being developed on our oscillators. Now, that's just the daily time frame, guys. If we jump over to the other time frames, which we will take a look at in just a second, we've got bullish divergence on those time frames as well. Now, I want to point a couple of things out. You can see here, guys, as long as we can hold above this $73 to $68 level, which is that major zone, we're going to be in good shape, and you could start to see it bottom out here, maybe create a double bottom, something like that. Maybe create a harmonic on a smaller time frame at this level. But if you hold above it, you're headed to 113. If you break below it and you get, under 68.65 and test it as resistance, you're headed back to $39.15 or $33.96, which is that next zone. You can see, guys, that's what happens. You get above, you back test it as resistance, 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 you head back to the bottom of the zone. Resistance, head back to the bottom of the zone. But as soon as you get over it, you go straight to the next level and then straight to the next level after that. So as long as you can stay above it, you're in good shape. The reason why I think it's at such interesting levels, guys, is because we've got signs of seller exhaustion at these levels. You don't want to just jump in and buy it now because it's the first time testing the level. Nobody knows if this is going to hold because it's our first time testing. So what you need to see happen is you need to see some type of second test. So let's just say we rally, we come to here, test it as resistance, we get that second low. Now we can confidently take the trade because market participants have confirmed a level that was once support. Support is support again. And then you will start to see that reaccumulation, people getting back into the stock. But if you go back to try to test that second level and you don't hold, it's all over. You're headed down to the next level. If we jump over to the 3-day, guys, I really like what's happening on the 3-day. What we could actually be seeing, guys, is a bullish harmonic, which it could either be a bullish cipher or a potential bullish shark, but I actually think a bullish cipher, seeing how we are at a pretty critical level right here. So a bullish cipher, the only difference between a cipher and a shark is a cipher is going to make a 78% retracement from X to A, and a bullish shark is going to make an 88.6% retracement or a 113. So it could take a, 886, which would be about here, which doesn't really make that much sense because you're right in the middle of a zone. I mean, you've got one high, but the 113 might make a little bit more sense, but it would be clear down here to get to that 113% retracement. So that very well could happen, but I mean, that takes you to like, what, 64 cents? Not going to happen. So the bullish cipher makes much more sense to me because, again, you are at that key level. You can also see that your BC projection right here, your C to D leg, is confluent with the 1618. So really nice stuff. And so is your A to B, your retracement of A to B. So your C point is also right there at that 1618. So really nice harmonic. And then you've got really, really mature bullish divergence on your MACD class A. And you're starting to build positive momentum for the first time since, April 12th. So very nice there. You're also got class B bullish divergence on your RSI. However, you are kind of rejecting and getting, shoved back down on that bearish control zone again. So I would really like to see it get out of that, 40, get back above, test it, and then start to head to higher levels. Because very well, like let's just say you rally here, you go up and make a type 1, which I would even like to see it do more like this, just a little bit, more defined rally, but, type 1 reaction, type 2 return, then you would start to get, your oscillators resetting, and who knows, then you could get, triple MACD bullish divergence and RSI divergence. And then if you jump over to the weekly, you don't quite have that divergence yet. So if you had that second confirmation low, it would give you time to develop those indicators on your weekly time frame. If we just look at the weekly time frame for what it is as of right now, I mean, gosh, guys, look at that like textbook bullish hammer that we just confirmed 2 weeks ago. Really, really nice stuff. That type of stuff happening at key levels is exactly what you want to see. You're losing negative momentum. You're getting back above 30. I mean, you're rejecting 30. You are seeing the lowest levels of relative strength that you have seen since 2016. So kind of scary stuff, but as long as you can hold, get back above, 40, you're in good shape. You did just break the 200-day moving average on the weekly, back tested it as resistance. So I would like to see it start getting up there. You got to make a higher low, guys. That's all there is to it. You got to get that second, test to, like I said, confirm that the bottom is in, because it's the first test. Nobody knows. Once you do that, then you can start working on a higher low and a higher high, and you're going to be in good shape. If you can create that second low here, if you can hold on to these levels, 68 to 73 bucks, the first target after that is 153. 113 obviously, which is a minor level, but 153 to 160 is your major level. Jump over to the monthly, guys. You're still just building negative momentum. I mean, it's pretty nasty looking. You just barely got into the bearish control zone on the monthly. So not very good looking stuff, guys. I mean, you absolutely could see lower prices, especially if you can't hold the zone. So that's everything, guys. This level right here, 68 to 73 bucks is everything. You break it, I'll see you at 39 bucks. I mean, that's just what it is. So hopefully we can hang on here, guys. Another little kind of hopium is we've got a smaller harmonic, potentially right here, like a bullish deep crab, something like this, where you've got a 1618 on your C to D leg. So who knows? Maybe you've got a first low, second low, in the works, but that's kind of hopium type stuff. So what I think, guys, what I'm going to be doing, I already dollar cost average into the stock for the long term. I like the fundamentals. I think $80 is a great price to start accumulating your position if you do not already own it. But I'm also going to be watching it to see what it does at these levels, because I will potentially take it as a swing trade if we can get a nice setup. So again, guys, 153 is the ultimate target, 197 after that, then 231 from there. So let me know what you think down in the comments, guys. I'd love to hear what you think or what your price target is. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come over and join us at the Patreon, and I'll see you guys in the next one. Peace.